Hello folks, welcome back to Market Junkies. This time we take a look at Arrival. By the close of the video, you're going to be equipped with the knowledge to determine whether the stock is a buy, hold or sell at current prices. Let's get into it. So who are Arrival? They're a pre-revenue British EV manufacturer. Although they've got very strong Russian roots and global appeal, the UK was chosen due to the engineering talent pool, according to the CEO. They came to the market via a SPAC deal back in March 2021. That was under the name CIIC Mergers. The SP, however, has floundered massively. It's currently below the pre merger announcement price, and they're circa 78% down from highs of $31.50. They've got global reach, they've got sites in Russia, India, USA, and the UK. It's clear the company has global aims, and the EU is also a focus going into 2023. And then micro factory innovation. Okay, this is what sets them apart. Essentially, they're looking to localize production for each micro factory. The idea is that it serves a city and its community, sourcing from the local area and developing custom vehicles for the region they're in. By localizing the supply chain, these micro factories help to reduce the environmental impact of manufacturing. Fantastic idea. Fantastic. I love it. Public float today sits just below 200 million. The market cap is just below 4.5 billion. Now, one worry I would raise at this point is shares outstanding are treble that of the existing public float at 668.95 million. Okay, so the industry as a whole, we'll all be aware of the EV industry and how it's growing today, but the market is currently worth $209 billion. Now, that's expected to quadruple to 957.42 billion by 2030. You can see in the bottom right there that growth is represented with that visual, and it also represents a 25% compound annual growth rate for the next 8 years. And to really highlight, I guess, that accelerating adoption that we're beginning to see, I've got some figures with EV vehicle registrations for the first half of 2021 here. In the US, they saw 297,000 registrations. In China, 1.149 million units. And in the EU, they saw 1.06 million units, which is huge. But what it does show is that the USA is lagging behind when it comes to EV adoption. That could be for the simple reason that the infrastructure isn't in play and it's a massive, massive country. And equally, China are always seen as these mass polluters. And so, what they actually did is they've been firming in, I guess, strategies around removing the reliance on natural gas or what have you for the last 10 to 15 years, which is probably why they've adopted a bit quicker than the US, or much quicker, I should say. And then I've got full figures from the UK. We had 1.6 million total car registrations last year. Now, interestingly, plug in vehicles now account for more than 1 in 6 registrations. Now, with while battery electric cars alone rise to 1 in 9. Now, that accounts for more registered this year than in 2016 to 2020 combined, which is absolutely enormous. So you can really see how the adoption is accelerating, particularly in the UK. In in Europe, public charge account is set to increase fourfold between 2015 and 2020, and that's in the hope that they unlock a potential bottleneck in raw materials and actually time associated with implementing and I guess the infrastructure, and that's according to McKinsey. They also cite the Netherlands cycle infrastructure because the belief is if you build the infrastructure, it will be leveraged, it will be utilized. Anyone who isn't aware, in the Netherlands, they have a whole host of cycling lanes. The idea was to reduce, I guess, the cars that are in cities and the cars leverage across the country. Equally, Netherlands is a very flat country. But what they've seen there is just mass adoption of cyclists. And the belief is very much in Europe, if you build the infrastructure, the adoption will take place and take place very quickly. And then we have fuel prices. Come on, everyone's seeing it, right? I mean, you go down, you fill up your car nowadays. What is it, 30% on the dollar or 30% on the pound in comparison to where it was this time last year? That's only going to do one thing, and that's going to be to support the EV adoption, right? And nobody can really explain to me why fuel prices are at the price they currently are when actually the raw material for it hasn't increased. What's happening now is retailers aren't passing on the savings that they're seeing. Okay, you don't just turn off oil and gas. They had hundreds of thousands of oil tankers full up during COVID, the heights of COVID. Do you think they've just gone away and they've all been used? The demand was lowered. But the point is now that we're bouncing back, these these savings aren't being passed on. And it could well be seen in the UK that retailers have basically said, hey, look, we're going to get 5 more years of this or 10 more years of being able to squeeze pennies and pounds out of these individuals. Let's just make the most of it. Or it could be completely innocent and they have rising costs themselves. And then finally, I want to talk about government intervention. I think this is the key point with this industry and the direction of travel, right? So from 2022 in the UK, as part of an overhaul of the country's building regs, every single new home that has parking with it must have an EV charge point associated. Okay, this is all in line with our net zero strategy, and it's expected to trigger about 90 billion in private sector investment. This is completely politically charged as well. So the EU has a bit of a reliance on Russia for their natural gas. The UK previously did and probably does to an extent still today, but we're moving very slowly towards green energy. I think it's about 45% currently for the country, so it's pretty good going. But the reason that they want to fast track this and increase this adoption is so that you can never be strong armed by an opponent or a political opponent, let's say. There's no need to get into a jousting match if they've got no leverage over you, right? And then we have the EU. Now they're aiming for an ICE ban by 2035, which is crazy. That's going to pull other countries' commitments forward as well, of course. And all signs point to that continued growth in that marketplace, with Europe leading the charge. McKinsey projections suggest that EVs will make up 75% of European new car sales by 2030. Again, we can talk about the geopolitical angle there with Russia, but also that new speed adoption. They've got it much more embedded within their metrics for sure. Equally, the EU is seeking to actually have 30 million by 2030, which is very interesting on the roads. And that's a massive increase from today, where they have 1.4 million EVs on European streets. Aside to that, there's 750 billion in stimulus packages, which includes 20 billion euros to boost the sales of clean vehicles, and 1 million electric and hydrogen vehicle charging stations are all to be installed by 2025. So they're really accelerating adoption there due to that government piece. Equally, in the US, we have the 1 trillion infrastructure bill, which has got 5.25 billion set aside for buses, and that's due to last until 2026. Again, I think America are really trying to play catch up here with these industry figures, because currently they are lagging way, way, way behind. Now we have the position in the business today. So they've got 5 current products or platforms that represent these micro factories, right? These are vans, normal size vans, large vans, bus, and a bus for emerging markets, and then a car. You can see the large van in the top left and the bus, general bus, with First Buses there, which is based out of the UK. And now I want to touch on the microfactory production piece. So the aim of the business is to have hundreds of microfactories across the globe. If they achieve this, put your hands down, mate. This is going to be the global leader in car manufacturing for the next 40 to 50 years, if they achieve it. Okay. First 2 microfactories are in Rock Hill. One in Rock Hill and the other is in Bicester. They're expected to start production in Q2 and Q3 of 2022, respectively. Arrival's third is in Charlotte, and that's expected to start production in Q4 2022. And the company has actually moved the start of its fourth construction back to 2023. It's probably not a bad thing. Get the first ones up and running, get some revenue in, prove the trials work, prove the factories work, go again. It makes sense. So the idea behind the van microfactories is they produce 10,000 per year once they reach full capacity on 2 shifts. And the idea behind that innovative production is it's lightweight. Okay, so you have autonomous robots which are used per site, and with the panel process, it's all panel driven manufacturing. So there's no need for paint shops, as lightweight coloured composite is used, and they're built near major customers. Okay, so they're cutting costs and they're hiring local workers, which, to be frank, strategy wise, it's unbelievable, because if you engage the local community, they're going to buy from you because it's politically charged, right? They see that you're a local business, you're trying to pump money into the local economy. They're going to use you as well, which is obviously a major point as well, is it's carbon light. Okay. You bring the production lines to the doorstep of the customers that you're supplying. You're not delivering cars over the other side of the globe. So it's really in line with their marketing as well. I want to touch on the fact that they've got a bloody deep order book to date. Okay, so with UPS, they've got 10k vans currently. There's an option for 10k more. If the logistics giant opts to purchase all 20,000 vehicles, that deal could be worth over 1 billion. Okay, it's crazy figures. They've got a 440 million plus lease plan initial order. That's of 3,000 vans. But by the way, lease plan of a global fleet of 1.9 million vehicles. So again, it could be absolutely astronomical. They've got a 5 bus order from Anaheim in California's public transport network, which, to be fair, that's pretty good going. I'm in another company called Vicinity Motor Corporations. I own stocks in that company, and they have been targeting Cali, and they haven't been able to. I haven't seen any announcements yet, and even the partner they've got is really well connected. It's got 3 sites in California. It's been there for like 10, 15 years. So I have to tip my hat to Arrival. I think getting that California order is enormous, and with that, I believe. Please correct me if I'm wrong, because this is off the top of my head. Cali is the biggest fleet in the US, I believe. Could be wrong, but I believe that's accurate. And then they've also got Q3 car launch with Uber. Sorry, Q3 2023 is when that comes to a close. But again, big names. Okay, so 12% of these 64,000 in letters of intent. So they've got 64,000 orders. 12% of that are buses. They've got a bus trial in Q4 2021, which is with First Buses, and that's for a 5,000 fleet in total. They've got a 1K bus cap there. So the first arrival vans will be built in the UK by the third quarter of next year as well. They've got a Royal Mail trial, but I'm not actually too sure how that panned out. I actually think they may have lost that deal because I haven't seen any updates on that. So people that are in this stock, please advise me, because I could have missed it. We're all human. So I'm not sure how that Royal Mail trial went, but you can see if you type it into Google, you can actually find the links to the trials, but they were a few years ago. But they've also got a trial with John Lewis and Waitrose, which is really cool. They've got 5,000 plus vehicles there as well, but I couldn't get a second confirmation on that number. And also, it's worth noting their service network program as well as their partners. Okay, so Arrival partnerships currently include that of the likes of Microsoft, which is an open source software platform. They've got Hitachi, they've got STM Microelectronics. It also counts LG Chem as its battery cell supplier, which is pretty huge. The service network program, I'm really impressed with. It trains and improves in-house staff today, and it's to be distributed worldwide to key partners. So they've got 4 in the US, which I believe are Amarit Fleet Solutions, Bridgestone Retail, Napa and Auto Parts, and Valvoline, I believe. And then there's also been 4 that are announced in the EU, which I kind of know what all of these are, and that's Arc Europe Group, QuickFit, which is huge in the UK, Rivus Fleet Solutions, and ZF. I'm not sure who ZF are actually. And then the final point I wanted to cover off, and it's something that they know in a lot of their earnings reports actually, is the cost of their supply chain is gradually elevating. And it was previously unforeseen costs that they didn't quite cater in. And we're going to cover it off actually in a few size pages when we get to the financials. But for this part of the video, I draw this to a close. Part 2, we're going to cover off the management, the financials, the outlook and catalyst, and then finally give our view on where we believe this company sits over the next 12 to 18 months. So yeah, please do tune in for part 2. I hope this one's been worthwhile for you. And as always, any critiques, any sort of advice you have for me moving forward, please just pop it in the comments. All the best.